Well, welcome everyone. I know people are just starting to join us right now. Thank you. We'll get started in just a moment, hearing from Bob Harvey with the Greater Houston Partnership, but we'll give it a minute or about 30 seconds for everyone to join us. All right, well, thank you. Most of you have been able to log on at this point, so welcome and good afternoon. We're back at the Greater Houston Partnership's COVID-19 Houston Business Forum virtual event series. Today we have a lenders forum to discuss the CARES Act, including the payroll protection plan. So again, thank you for joining us in this series of programming. We'll continue to produce these throughout the month and look forward to your feedback as well. We have a poll at the end of this webinar, so you can share with us some of your future interests in our programming. You can also find all of our programming, our webinar programming, on our website at houston.org/recovery. We do have a new microsite, the Greater Houston Business Recovery Center, and it's at www.houston.org/recovery. This will help aid companies in planning their next steps, and will contain information on recovery resources, including federal lending programs, local business assistance programs, and information about changes to laws and regulations. So please join us viewing that website after this event is over. Today's program is just a quick overview, remarks from our President and CEO, Bob Harvey, and then we will jump into our panel presentation, which will be moderated by Gina Luna. We'll have a quick Q&A session at the end, and then we'll launch a poll. So please do stay with us for the poll at the end of the event. Thanks so much. And then also, just as a reminder, and I'll leave this on the screen also at the very end of the program, we do have a list of business resources from the Greater Houston Partnership. Many of you have joined us in previous webinars, so you will have seen this, but we did again update and add a new site, houston.org/recovery. So feel free to visit that site, and we do update that daily. We also have our partnership daily briefing email. You should be receiving that. And if not, please feel free to use our chat feature to let us know if you're not receiving that. And of course, our team at the partnership is on standby to receive any of your calls or questions. And you can send them an email at member.engagement@houston.org. A couple of tips for better viewing for today's program. We do have a chat feature that is on right now. You'll be able to share any comments or technical issues with our staff, and it will go directly to our staff, so you can use that chat feature. And then, of course, if you have any questions, you can put that in the Q&A tab, and that Q&A tab will be answered also behind the scenes by some of our staff as well. So we'll go ahead and get started now with Bob Harvey, President and CEO of the Greater Houston Partnership, for a brief address. Thanks, Bob.
All righty. Thank you, Carrie, and thank you to you and the entire events team, frankly, for all the work you're doing to orchestrate these many conferences that we're having. I do want to thank Gina Luna, who I'll introduce more formally in just a minute, for her participation today, but also want to thank the representatives of the 4 Houston financial services firms that are joining us on this call. All of this has been on relatively short notice. I'm sure all of them have spent the last several days really getting up to speed on what we'll be talking about today. So thank you for agreeing to participate. We'll have Val Jones from Wells Fargo, Gentry Smith from Amegy Bank, Gary Henderson from Allegiance Bank, and David Valez from Regions Bank. So thanks to the 4 of you. Let me just provide a very quick overview of what we've been up to, some of which was touched on by what Carrie was saying about the resources that are available. We launched a collection of COVID-19 related resources now several weeks ago. I think people are finding valuable the daily policy update that Carrie referred to. People are finding very helpful. So hopefully you're getting that. And if you're not getting it, do take the time to reach out to us so we'll get you on that mailing list. Our research department has tried to keep everyone up to speed on the economic indicators. Patrick Jankowski had a webinar on Tuesday that's available on our website if you didn't see it. And we'll be providing updates on the economic situation in Houston in the weeks ahead. We've been working closely with Harris County and with the city of Houston to craft the major policy actions that have taken place that you might say culminated with the stay home, work safe order. And we were instrumental in getting some of that work safe aspect into the order, and that teed up the launch of our Work Safe Company program that Carrie mentioned, where we've outlined 10 principles that companies can and arguably should follow to keep the essential workers safe, the workers that they are still asking to come to a physical workplace. How do we maintain a safe work environment for them? So it's really there for employers to see and hopefully adhere to and sign up for, but it's also out there for employees to see. It gives them a basis of a communication with their employer as to whether there is a safe workplace in place. As you know, everything took a new step in the last week or so as we launched the Greater Houston Business Recovery Center. So in addition to dealing with the virus and trying to contain and mitigate the spread of the virus, we're also now thinking very specifically and consciously about recovery. How do we help businesses survive? How do we help them recover? Ultimately, how we help them grow in the months ahead. But this center is developing a lot of useful programming. Please use it as a resource. The first step in that recovery effort, we feel, is to make people aware of the various federal lending programs, and that's the topic of today's discussion specifically. So just keep in mind that all of our recovery-related resource is in the houston.org/recovery site. So now let me introduce Gina Luna, who will provide an overview of the federal legislation that was recently enacted to support businesses in the recovery from COVID-19. And Gina will then later lead a Q&A session with our panel of banking experts. Most of you know Gina. She was a former chair of the Greater Houston Partnership back in 2015. She had a 22-year career with JP Chase, where she played a variety of roles, culminating with her role as chairman of JP Chase in the Houston region. And she was the head of middle market banking from 2009 to 2016. She now leads Luna Strategies, where she counsels companies and their leaders on complex strategic issues and growth initiatives. And she serves on several public and private boards. She's deeply engaged in the startup ecosystem. She, until very recently, chaired Houston Exponential. She led the Partnerships Innovation Roundtable, so she's very familiar with small to medium businesses from her days at Chase, but also the startup community from her involvement in that effort. So Gina, if you don't mind, I'll turn the floor over to you. Thank you for hosting today.
Thank you, Bob, and thanks everyone for calling in. I want to start by thanking our Houston Regional Congressional Delegation for their leadership. These are certainly unprecedented challenges, and the proactive recovery effort is essential. I also want to thank our first responders and our invaluable healthcare workers and our elected officials and leaders at all levels of government for acting with urgency to respond to this public health and economic crisis. So I'll start and provide a brief context on the federal stimulus package, and then I'll introduce our panelists and start the discussion. As I'm sure you've followed, Congress has passed and the President has signed a stimulus package in 3 phases. The first phase invested $8.3 billion in public health response to the coronavirus. Shortly after that, Congress passed a second phase of legislation to support workers and small business impacted by the pandemic. And for the purpose of today's discussion, I want to focus on the third phase, the Coronavirus Aid, Relief, and Economic Security Act. And because that's such a mouthful, we're going to call it the CARES Act, which was signed on March 27th. I'll provide some context on key small business provisions first. So the CARES Act is more than $2 trillion stimulus bill. The bill provides relief to key sectors of the economy, and the emphasis is squarely on business recovery. The CARES Act includes a $350 billion small business lending program called the Paycheck Protection Program, and we'll sometimes refer to that as PPP, for small businesses, self-employed individuals, and certain nonprofits. This program will be the primary focus for today's panel discussion, so I will save the discussion of this program for later in our conversation. But it's also worth highlighting two other key provisions of the bill. First, the bill also expands eligibility for entities suffering economic harm due to COVID-19 to access Small Business Administration's economic injury disaster loans. These are referred to as EIDL loans, while also giving the SBA more flexibility to process and disperse small dollar loans. And secondly, the CARES Act requires the SBA to pay all principal, interest, and fees on all existing SBA loan products, including 7A Community Advantage, 504, and microloan programs, for 6 months to provide relief to small businesses negatively affected by COVID-19. The U.S. Chamber of Commerce has estimated that small businesses in Texas could receive $27.3 billion in aid through the CARES Act. So quite simply, we know many Houston companies are hurting and don't have the resources to sustain themselves for weeks without help. The funds provided through the CARES Act are essential to ensure Houston businesses can meet the payroll and cover other expenses during this difficult time. So it's now my pleasure to introduce our panel and talk more about how we can help Houston businesses. Joining us today is Val Jones, who's a small business leader for the Texas region for Wells Fargo. Gentry Smith, Senior Vice President and SBA Lending Manager for Amegy Bank. Gary Henderson, Executive Vice President and Chief SBA Officer for Allegiance Bank. And last, David Velez, Houston Vice President for SBA Lending for Regions Bank. And before we begin our discussion, I want to make a point about the ongoing implementation of the stimulus recovery efforts. As details are worked out, things continue to be fluid, and this group will not have all the answers today because all of the answers have not yet been dictated by the SBA. So I do think it's important for everyone in the audience to remember that this is still a dynamic situation, and this group is going to respond to the best of their ability, but this is evolving. So hopefully you'll join us for future conversations where we don't have all the answers today. So welcome to our panelists, and I will start with the first question, really related to just the broad business recovery efforts. And Gentry, maybe you can comment, beyond the remarks that I've just made, what is the driving force behind the stimulus package as a whole?
Okay, thank you for allowing me to be on this panel, first of all. And can all y'all hear me?
Yes.
Okay. It's my opinion, but I think the driving force behind the stimulus package is to help small businesses that have been affected by this to keep their payrolls going and help them pay their bills while their revenues essentially have come to a halt depending on the business. And so it's just trying to keep things going until the U.S. can actually, so the U.S. can actually come out of this on the other side. The hope is within 8 weeks, we will have enough information that people can start going back to work and businesses can start getting up and going again. I meant to say country. I could not think of that word. That's all. I'm sorry.
Thank you, Gentry. I absolutely agree with you. And to that point, let's talk about what is arguably the hallmark of the CARES Act, and that's the Paycheck Protection Program. As lenders who are all experienced in the traditional SBA programs, I'd love to talk about what sets this program apart from others that people are familiar with, like the 7A SBA loan program, for example. David, I might ask you to take that one, and then others may want to weigh in.
So we're still getting additional guidance from the SBA on the specifics of it. But from what we know today, and things can change, but in general, it doesn't need to pass the credit elsewhere test. The loan payments are going to be deferred for the first 6 months. There's no collateral or personal guarantees that are going to be required. And neither the government or the lender is going to charge the small businesses any fees. The term is going to be for 2 years with an interest rate of 0.5%. Thank you.
Incredibly flexible, and hopefully quick and easier for people to access. And so maybe we'll switch and talk about access to that program that is going to be so important. And Gary, if you could talk about what businesses are eligible for the Paycheck Protection Program and how can a business owner access it, what information do they need, and maybe what are some of the things that they can be doing to prepare?
Okay, yeah, thank you. So the applicant must be a business concern, a nonprofit organization, a veterans organization, or a tribal business concern with up to 500 employees. Also included are sole proprietorships, independent contractors, and eligible self-employed individuals. That's not been defined yet. For business concerns that have more than one physical location, any business concern that does employ more than 500 employees per physical location of the business, not more than 500 employees, sorry, per physical location of the business concern, and is assigned a NAICS code. I don't know if everybody's familiar with that. It's the North American Industry Classification System. If they're code 72, they're eligible. So that's maybe a lot of, franchise restaurants or something like that. So the 72 NAICS code covers accommodation, food services. So that's pretty much hotel, motels, RV parks, pretty much every restaurant type you can think of. And it includes drinking places. So besides, you asked a question about how are they eligible. They just need to be confident that they are an eligible applicant based on the guidelines provided by SBA. The best chance for an owner to be qualified and really to be ready is to have access to their financial information that SBA is going to require. We're still waiting on guidance on that. And really to complete any application documents as complete as possible. I think the last thing I would recommend would be, contact the bank that you have a relationship with. If your bank does not have an SBA department and is not participating in the PPP loan program, you can ask your banker if they could recommend an SBA lender in the community. You could also reach out to the Houston SBA district office. They're a great resource. You can also look online. Our local lenders have an organization here in Houston. It's called, it's www.haggl.com. All the SBA lenders are listed on that website.
It's great, and we will make sure people get the links to those resources after the call and can access specifically what information they should start pulling together. So the CARES Act, again, is to streamline the SBA's standard lending practices. And so Val, if you can talk about the ways in which it should be easier for those that need access to the program to get that access, and also importantly, how is it making it easier for lenders like yourself to help your community? Val, you're on mute. Oh, now we can hear you a little bit.
Oh, okay.
Still can't hear you.
Can you hear me through these?
Yes, that's perfect.
I keep cutting in and out of my computer, so apologize for that. I'm going to start with the lender side first, because that's really what's going to impact you as a customer, right? So on the lender side, SBA has allowed us as lenders to assess creditworthiness and to do kind of the back end stuff without going through all of the normal SBA channels. What that means is that we can speed up the process significantly. I will tell you that underwriting guidelines are much more lenient and relaxed than they may have been in the past. Also, for our customers, since things are so strange right now, we're not going to be taking a look at what's happening today for your business. We're going to look back as to what was happening February 15th in your business, right? That gives us a much more accurate view of the health of your business and what was actually happening at that time. Things like how many employees did you have at that time? What were your expenses at that time? So that helps out a lot. For you as a customer, obviously that means that you're going to get a decision faster. You're going to be a little bit more relaxed with the criteria that we're looking at. There still is criteria you do have to qualify. And I would say that I can't speak on behalf of every bank. Obviously, we have pretty good representation here, but I know all of the very large banks like Wells Fargo are going to be having an online-only application process. So that's to make sure that our customers don't have to worry about coming into a branch or social distancing, things like that. We want to make it streamlined and easy for you to be able to just take care of it yourself online.
And I have a couple of follow-up questions to that, Val. Do we have a sense yet for the amount of time it will take from the time an application is submitted to when someone gets a response and ultimately gets their funds? Do we know that yet?
We don't, right? So again, the devil's in the details with all of this work. We're still getting information from the SBA, as you mentioned when we kicked off the call. So it's going to be really hard for us to say. I think we'll know more once the applications go live. And I think every bank might be in a slightly different situation. So unfortunately, that's one of those that we just don't know right now.
Right. Thank you. And just one other question to follow up on that is, are there special or different recovery resources available for nonprofit entities under the CARES Act?
There are. It looks like David wanted to chime in. Go ahead.
Yeah, I
David.
can take care of that one. So the EIDL, the Economic Injury Disaster Loan, is also available. That one you apply directly with the federal government. The interest rate for that is going to be 2.75, and the amortization is up to 30 years. That EIDL is also available for businesses, and the interest rate on that is 3.75, also up to 30 years. Now, you can't use the same, you could apply for both programs, you just can't use the proceeds for both. So if you're using payroll expense under the PPP, then you can't take advantage of the payroll expense under the EIDL. So what I would say is really take a look at both of them, get wise counsel, speak to your CPAs, your attorneys, your bankers, have that relationship with your bankers, and kind of look at both the programs and make the best decision for yourself, because the EIDL will cover up to 6 months of expenses, where the PPP is looking at about 8 weeks of payroll. Hope that helps.
Yes, thank you. Anyone else want to chime in on that question before we move on? Okay, so again, just going back, and Val, you touched on the lender perspective and certainly how Wells is approaching it. Gentry, any different perspective or anything to add on the eligibility requirements and how you as a lender will evaluate those, and a guess on when this program might be actually available?
So like everybody has said, we're still waiting on final guidance from the SBA on the eligibility. The only thing that we have been told so far is a small business concern. They have to meet that criteria. And there's different criteria under SBA of what that means. But what everybody keeps hearing is 500 employees or less. There are certain NAISC codes that can require more employees. They just have to know which ones those are, and their bankers are going to be able to provide that information for them. But there's also the rule of affiliation that comes into play with SBA as well. So we're still trying to get guidance from SBA if we need to apply the rule of affiliation to these businesses. So what I'm meaning is, if one business has affiliates where their owner of their current business have multiple ownerships in other businesses, if we need to include all of those businesses when we're calculating the employees or not. So we don't know that answer yet. We are hearing that we should get some type of final guidance from the SBA late today. The program, of course, Secretary Minutia came out on Monday and said it will be live on Friday. Well, I don't know about all banks, but I think all the larger banks, we're all in communication right now. If we get final guidance tomorrow, we still, you know, we're all trying to set up our processes, but we won't have those processes ready to go 12 o'clock tonight and be open to accepting applications. And I think that's what a lot of businesses owners are doing. They're sending the sample application that's out there to all of us at banks, but we all internally have to do things on the banking side to create our own applications and things like that, and to understand what is required. So you have to understand that, yes, if it goes live tomorrow, we might as lenders not be ready to go live tomorrow at 100% because we are still trying to figure all this out, because it's we know what's in the bill. So we all hear the words that are in the bill, but then SBA provides their guidance. So just like David had said before, where on the PPP loan, the term is over 2 years and the interest rate is 0.5%. In the bill, it says the term could be up to 10 years and the interest rate could be up to 4%. So SBA went and said, okay, that's what the bill says, but no, this is what we're doing. So we can't take what's in the bill and say that's exactly what SBA is going to do and require us as lenders to do. So we're all sitting waiting just patiently for the SBA to provide the guidance and to be able to do it and provide the experience to be a pleasant experience with the customers. And like Val had also said, the majority of the big banks are probably going to do most of this online, but I think everybody will have the capabilities of also doing, you know, downloading a paper application and then uploading it online. But for the majority of everything, we'll be doing online because we can't go into a branch and we can't do things in person because then we're not doing the social distancing, we're not following the CDC guidelines. So this is all very new for a lot of us bankers because there is a rule in the banking world about knowing your customer as well. And, you know, going out and doing physical, you know, touching, seeing the spots and things like that. So we're all still trying to understand what is required of the banks and what we need to do to help the customers.
Thank you, Gentry. I think you hit on so many important points, and thanks to all of your banks for hustling. I know this is not easy, and everybody is working as quickly as they can. So thank you for that. And I know we have had a ton of questions before the call about this affiliation question, and probably many of you dialed in hoping you'd get the answer to that. And unfortunately, the SBA has not called us and asked us what we want the answer to be. So we await like everyone else, and know that's a really important point for so many of your businesses. And be assured we will continue this dialogue once we have more clarity. But in the meantime, I know a very important feature of the PPP is the notion of a forgivable loan, and what is required and what is that aspect, and how should potential borrowers think about that. So David, I'll ask you to speak to that.
Yeah, appreciate that. Again, as we're still waiting for additional guidance, I can only tell you what we know today. And to Gentry's point, we thought we had guidance on the interest rate and term, and that changed, so we need to be a little bit flexible. But what we know today is that a borrower is eligible for loan forgiveness equal to the amount the borrower spent on the following items during 8 weeks period, beginning on the date that the loan is originated. So from the day that the loan is originated, moving forward for 8 weeks, and that's going to be based on the employer maintaining or quickly rehiring employees and maintaining the salaries levels. They have to reduce if full-time headcount declines or if salaries and wages decrease. So if there's any decline in the salaries or the wages, the amount that's going to be forgiven could be scaled back. Fully forgiven if the funds are used for payroll costs, interest on mortgage, rent, and utilities. And utilities are defined as electricity, gas, water, transportation, telephone, or internet. And at least 75% of the forgivable amount has to be used for payroll purposes. Now, note, the government is now advising that because of the high participation, it anticipates that not more than 25% of the forgivable amount not be used for payroll. So, and of course, the forgiveness amount can't exceed the amount of the loan itself. I know there's a lot there, but you really have to sit down and get guidance from your CPA attorneys and bankers, and it's really where the relationships matter. And
to make sure you get good guidance how it applies specifically to you. But I do think that is helpful for this group. Gary, can you talk about anything that is available under the CARES Act, other resources that might apply to businesses that are, say, slightly larger than 500 employees? What if I have 550 employees? Can I get any help?
Gina, that was a great question. It's interesting because as an SBA lender, I immediately just went to what I care about, which is SBA lending. So it actually made me read the rest of the legislation. So yeah, there's 3 benefits in the CARES Act for companies with over 500 employees. There's loans to mid-sized businesses, which I was kind of surprised to see. There's also an employee retention tax credit and also a payroll tax holiday. And I'll speak a little bit on each one of these just briefly. And I'm sure these are all subject to modification, but for mid-sized businesses from 500 to 10,000 employees, those are eligible for direct loans under the CARES Act. The Act does not say where to obtain these direct loans, but I'm sure there'll be some guidance on that coming out. For a business to receive this type of loan, the business must make a good faith certification that it will comply with certain requirements that are listed in the CARES Act. There's kind of numerous, so I won't go through each one of them. They're a little bit detail oriented. But the certification will likely occur on a form to be provided as part of the application for the loan, and any failure to comply with the certifications could result in a rescission of the loan. The next benefit would be an employee retention tax credit. The tax credit provides for a refundable payroll tax credit for 50% of the wages paid by employers during the COVID-19 crisis, and applies to wages that were paid between March 13th of 2020 and through the end of this year, 2020. And there's also some qualifications to that as well. The payroll tax holiday is the last one. It provides for, the CARES Act provides a payroll tax holiday, and that's to assist employers with immediate cash flow issues. The CARES Act is going to provide that employers can defer payment of their portion of the Social Security taxes that they would otherwise be obligated to pay. These deferred payroll taxes would be required to be paid over a 2-year period, half being required to be paid by December 31 of 2021, and the remaining half to be paid by December 31 of 2022.
Thank you. That is helpful, and a good bit of details in each one of those. Maybe switching gears and just stepping back as a business owner, thinking about all of these different resources. Val, can you help talk about the pros and cons and why maybe a small business owner would pursue or not pursue some of these resources that are going to become available through the CARES Act?
Yeah, a pleasure. Hopefully you can hear me. I think I'm frozen on your screen. I can't control Zoom. Can you hear me okay?
Hear you perfect. Thank you.
Okay, cool. So, I mean, you know, as someone mentioned earlier, I think it was David, now's a great time to seek some counsel, right? So your CPA is a great counsel, your banker's a great counsel, because there's a lot of complexity to this situation, and there's lots of options, right? So you've got PPP, you've got the EIDL, you've got regular lending, right? So let's not forget that your banks are still doing regular credit facilities. I would say some of the pros and cons. So let's talk about PPP. Obviously, there's the forgiveness piece in there, which is really critical, right? If you need to use it for those specific purposes, payroll, utilities, mortgage, you know, that's going to be a great option for you. As you can hear when we're talking about it, though, it might be some time before you get those funds. None of us are really clear on, you know, from the day of application to getting approved to getting your money. It's not really clear how long that process is going to be. You might have some more immediate needs than that. So that might be a good opportunity to talk to your banker about other credit facilities, just standard credit options that you may have. They could probably process those a lot faster. Of course, the cons of that is that you're going to pay interest on those, so you have to repay those. Same thing with the EIDL. Those are repaid. Now, granted, the EIDL, those are extremely low interest rate. You heard David talking about specifically what they are. they're long-term. There's options to delay the payments, defer the payments, things like that when we have disasters such as these. So hopefully that's not confusing, but it does illustrate the complexity. There are lots of pros and cons to each option. I would definitely recommend speaking to counsel about that. Whoever you trust to give you financial advice, that's who I would talk to about what your options are.
I think that's a great.
Real quick on the EIDL, it's got a couple different components that are really beneficial as well. That one has no payments for the first 12 months. The interest does accrue, but there's no payments for the first 12 months. And from the moment that you apply, there's a pretty quick turnaround that you could get a grant in there for up to $10,000. And then once they start processing the application, they're saying that after 5 days of that, they're going to go ahead and do an initial fund of $25,000 if approved. So there's some flexibility there. It also funds for accounts payable where the PPP won't. And if you're in a business that you had to take on additional inventory, and for some reason those orders were either canceled or delayed or whatnot, you could possibly be able to fund some of that cost that you had to expend out for inventory. So again, talk to your banker, get some wise counsel, and some flexibility, and really weigh out both options. And you could apply for both, so it's worth noting.
Well, and matching the right assistance or loan structure and product with what the need is for your financing is really important. And again, your bankers and your CPAs are great resources to help you make sure you're making that correct match. Gentry, if you would maybe just touch on key areas that business owners need to be aware of to make sure that they would legitimately qualify and then would be in compliance with the process and the terms of these different credit vehicles.
Okay, so I'm going to specifically talk to about the PPP program on the different programs regarding this. But the eligibility, like we said, the big one is the 500 employees. You know, if you're a small business and you have 100 employees, there's no doubt you're eligible for this, as long as, you know, there's no affiliation needed. But part of the application that's being floated around, there is 7 different things that the people have to attest to. You have to, you know, I'll read a couple. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So you have to essentially say your business is being affected and you need this to keep the business going. And then you also have to certify that the funds will be used to retain workers and maintain payroll and make mortgage payments, make lease payments, and utility payments. So, and that's the first 2, but there's 5 others that you have to attest to as well. Yet, what I will caution business owners is, yes, there is no personal guarantees, but as a business owner, you're going to be signing these documents that are backed by the federal government. And so if for some reason the information that is provided on these documents is fraudulent, they have every right to go back after the business owner and the business. And with that, I know we're trying to catch up on time, so I'll keep it with that.
Okay, anyone else have anything you want to add? Okay, I will move on in respect of our time to our last question, and I will direct this to David, but welcome others to weigh in, because I do think this is a question that you all may have an opinion on, and that is really, how can the business community coordinate more effectively with the federal government, with small business owners, and with you as lenders to ensure that every small business owner has access to the resources that are available and can take advantage of those when needed, to your point?
Yeah, so I mean, the theme for me is going to be about relationships. And I said this over and over again. And your banker is going to have relationships with a lot of the key folks in the community that are going to be able to help with this. For me, I would say, first and foremost, seek wise counsel. Have your CPA, have your attorney, have your banker, and really your inner team that you have within your company to go over all the options. Then the resource like the Greater Houston Partnership, you guys have done a great job of keeping everybody informed with your webinars, with the new coalition that you have in place. And we're just so grateful for that. Then I would look at the Greater Houston SBDC. It's a great resource, both the SBDC and SCORE, that they could help gather the information that's going to be needed. And along with the Women's Business Center, they're a good institution that really helps you get all the information together. And another one that I like to look at is ICIC.org. And for those that don't know, it's a initiative for a competitive inner city. And, you know, I really thank you for giving us the time. And for our fellow bankers in the room, I mean, we really are the financial first responders. And in a time with so much darkness, it really gives us an opportunity to be the light and to answer a lot of questions. We're working around the clock. And thank you for the time.
I thank you all for being the financial first responders and for being brave to come on this call and take questions when we don't really know all the answers. And so your thoughts and your insights and what you are able to answer is really valuable. And I do thank you for that. And I hope we can have you back for a further discussion when there is more clarity. And I know you all, like the Greater Houston Partnership, just want to do everything we can to help Houston businesses recover and to be able to access these programs. And we all want to get back to healthy business post COVID-19. So again, I will say thank you, and thanks to GHP for all you're doing, and I will turn it back to you, Bob.
All right, well, Gina, thank you. Thank you again to everyone who's called in. If you have follow-up questions, the best place to go to at the partnership, just for one, I'll call them one-off questions, would be to our member engagement portal. It's member.engagement@houston.org, and they can channel that question to the appropriate resource at the partnership or elsewhere. Gina, thank you for stepping in. It's great to work with you again on something of this magnitude. We are committed to sharing more information as we go forward. It was clear to us that we wouldn't have all the answers by today, given the process whereby the regs are developed, but we wanted to get out here quickly with this first attempt. Do treat the Greater Houston Business Recovery Center as a broad resource for information. As we said, houston.org/recovery is the place to go. So thank you to our panelists, Val, Gentry, Gary, David. We reached out to you on very short notice. Thank you for putting your hands up, agreeing to participate in providing a great deal of information today. Thanks so much. It's been a pleasure working with you. And with that, I'll turn it over to Carrie.
Great, Bob, thank you. For those that would still stay on the line for just a moment, we're going to launch a quick poll. This is to help us gather additional information and use it to provide additional programming for you, as well as other services from our community. And we'll just take a quick minute for you all to type in your responses, if you would. Again, thank you everyone for joining us today, and we look forward to hearing from you. As Bob mentioned, we also have a shared screen that I'll be putting up that if you would like to provide or you're interested in learning more about our resources, I'll leave that screen up for you right now so that you have the ability to take a screenshot or write that information down. Thank you.